I'm buying up more shares of this stock before it 2x's again, and I think you should be buying this stock too. Now, this is not financial advice. This is for entertainment only. Obviously, this is just my opinion, but I've been making some good money with this stock that I'm going to talk about in this video, so I wanted to make a video on it. I've talked about this stock before too, so see if you can guess what it is. This stock has already gone from $23 a share to $60 a share once, and I think that it can 2x again this year. It's heavily shorted in the market, and I think heavily misunderstood by the market in the way that sort of GameStop had this inherent value that wasn't priced into its stock that helped it gain over the summer. This stock that I'm going to talk about has an inherent value that is just completely misunderstood by some of the analysts in the market who are short selling it. Online gambling stocks have obviously been a good investment this year, last year. DraftKings comes to mind, is a big sort of secular trend that's happening in the market. The other big trend that's happening is cord cutting households, OTT, over the top, streaming. Many people are keeping their cable so that they can watch things like sports. 80% of people say that they don't get rid of cable because cable has sports. However, by the end of this decade, we will look back and we will say, my God, the transformation is complete. Everyone will have switched over to streaming only. Cable will be like a dinosaur. And there is one company, FuboTV, that is both a streaming TV provider and a sports betting platform. Boop. That should be exciting enough for you, but a lot of the market does not understand the inherent value of FuboTV. A lot of analysts are short selling this stock. Why is that? Analysts are not seeing the power of this combination of sports betting and streaming. I know this because they're giving price targets of like $8. I know this because Fubo stock and most shorted stock on the market behind Gamestop. I mean, there are a lot of bears on FuboTV. It's crazy to me. Today, if anything, this supports my thesis. We're up 24% today on FuboTV stock, and I think the market is starting to wake up to at least the possibility of what FuboTV can do. Yes, shares were up 24% today. I think this could gain another 50% this year alone. This is an all-time high of 60 here about a month ago, right here. And then the short sellers came out and everyone just sort of like forgot this thesis that, you know, it's sports betting, it's streaming, it's awesome. And the stock like fell down here. This is where I made a video down here a few weeks ago. You can watch that video here where I basically like sort of, you know, rally the troops, rouse enthusiasm for this stock again when nobody wanted to talk about it. And I just didn't understand the giant sell-off. So we've already had an all-time high of $60 a share. We're now screaming up to touching that all-time high again. And I think once people see what is possible with FuboTV, once they start rolling out online gambling, once they start rolling out fantasy betting for fake money, free to play fantasy this summer, people are going to say, aha, I see where they're going with this. Because remember, Netflix wasn't understood at the beginning. Roku wasn't really understood early on. This is like the sort of next iteration in that type of programming, except what makes this so exciting is that it's a completely new thing. It's a wide open spaces here. It's not DraftKings. It's not, you know, Roku. It's some sort of combination of those two. And let me explain why that's so powerful. Okay. You will watch through the FuboTV interface and you will wager through the FuboTV interface. So all that data that FuboTV is picking up from the viewers, their viewing habits, when they click off, when they change the channel, what's interesting to them, what's not, they can A/B test all this stuff and figure out when people are most likely to want to wager. In-game wagering, not just wagering on the game as a whole, but wagering on little things, fine things throughout the game, gamifying the whole experience. That's something that DraftKings doesn't really have yet. They don't have the data. Fubo will have the data of viewer behavior. It will be on their home turf in the FuboTV ecosystem that this wagering will be going on. It's not like a third-party platform. So from farm to table, FuboTV will be controlling the data. And we all know that data is so important with stuff like this to understand user behavior and to get the most money out of each user, the average revenue per user. Because that's been the big bear case against FuboTV, and sort of a valid one at that, is that, well, how can they compete against YouTube TV? How can they compete against Hulu? Things like this. It's a tough business, low margins. Here's how they compete. Hulu is owned by Disney. Disney can't come within a mile of sports betting, okay? Same with YouTube. They need to maintain a squeaky clean, family-friendly image and programming and all that. They can't offer sport betting. It's against their brand. How do I know that FuboTV can compete against Disney, meaning Hulu or YouTube TV? Disney owns 10% of the stake of FuboTV. Why would they be doing that? They could just do it themselves, but they won't because they can't. They need to go in the back door and invest in another company that's willing to put themselves out there. A smaller company, a company that's born and created to offer programming with sports betting. Disney has a 10% stake in FuboTV. That to me is like really exciting because it means that Disney understands the money-making potential of this kind of setup, but they can't invest in it directly. So they're coming around the back door to invest in it. The company is valued at about $5.7 billion now. I loved this company when it was in the like $2.5 billion range, just like earlier this week. But what I love is that FuboTV is growing so quickly that I think that this is a 5x or a 10x stock in the making in the next like 4 years. And I'll tell you why. Because they are growing at about 60% a year. Their revenue in 2020 was $250 million. Their projected revenue for 2025 going into 2026 is $2.2 billion. If they can increase their revenue to $2.2 billion and then you put a multiple on that of like, 20x or whatever to get sort of like a proper valuation of these software stocks, hot growth stocks on the market, things like this. If you do that admittedly very rough back of the envelope math, that would put Fubo shares at $400 a share. What is that? 8 times more than where the stock is trading at now. And that's within 5 years. If FuboTV drops back into the 40s, I could see this being a 10-bagger in the next 5 years. This is the kind of stock that you're looking for. One that has a new market to address and one that is growing so rapidly. They're growing 60% a year and they are projected to keep growing because remember, there's this flood of people cutting the cord, getting away from cable, coming over to things like FuboTV. 80% of people say they don't leave cable because of sports alone, specifically because of sports. So if there is a company like FuboTV that is geared around sports, it will be a lot more enticing for people to cut the cord finally and go straight to a streaming first model. I could go on and on about this stock. I just think it's really exciting if they can get first this summer the fantasy, free-to-play fantasy going, draw people in, do some testing, and then later in the year, because we know they've already bought a sports book company with some great executives coming on board, if they can offer for real sports betting by the end of 2021, I think this could be at $90 a share. No questions asked. What I kind of love about this stock now is that I've been so bullish on FuboTV for a long time. I mean, you can watch numerous videos that I've made on this channel. But now, in the midst of all this Wallstreetbets madness, people are looking for highly shorted stocks to put their money into. And Fubo is one of the most shorted stocks on the market. So it's this like 2-for-1 play where if you own Fubo, it's a great stock to own for the long term, and yet it has all of this implied upward pressure in the short term because of all the Wallstreetbets short squeezing going on. What's happening today is that we got a Wedbush analyst giving a price target of $50 a share, and the stock responded almost exactly, putting the stock at $50 a share. This has been just such a really funny stock, one that's been like so influenced by analysts giving high price targets or low price targets. I mean, when the stock was right here, this same Wedbush analyst gave a price target of, I think, $40 a share, and it sent it up here. And then another analyst gave a price target of $60 a share, and it sent it all the way up to $60 a share. And then another analyst gave a price target of $8 a share, and it dropped back down to 23. And then right here, they secured a deal to get a sports bookmaker and it went up, but then it fell back down. I mean, it's like the people haven't been convinced. Clearly the market has not been convinced that this stock is a winner. And the most common question that I get is like, well, how can they compete with the big boys? How can they compete with the YouTube TVs, with the Hulus, etc.? It's because it's a new thing, and it's because they offer sports betting, and it's because neither Google nor Disney, who owns Hulu, can go in on the sports betting. So in that way, they have a leg up, and they have a step ahead of any of the competition who is offering this kind of thing. You look at like a DraftKings, I guess. Well, DraftKings is obviously very different, even though it's got the sports betting aspect of it. I just love the OTT, over the top, cord cutting, streaming first space, things like Roku, things like FuboTV. I love this space because there's over 200 million television cable watching households in the United States. It's just going to be a flood over the next like 5 years, let's say, of people cutting the cord and coming over to streaming only and looking for a way to watch regular television. So I would encourage you to like go check out FuboTV's website, and it's $65 a month. I'm going to sign up for a subscription and check it out. I'm really excited to do that and then report back on, if I still think it's cool after using it, because that's another thing that people don't know is that what is it really like? Nobody's had it. Nobody's used it. Nobody knows anyone who's used it. So I'll be that guy. I'll be that person. I'll sign up for a subscription and I will report back to you. So make sure that you subscribe to this channel so you can get all the deets. I will make a Palantir video sometime this week. A lot going on with Palantir. Demo day, earnings coming up, share lockup period expiring, all that fun stuff. If you want to watch my last video on Fubo, you can watch that here. Guys, thanks so much for watching. Like this video if you got something out of it. Subscribe to the channel if you're not already. My name's Bradley. I'll see you real soon on the next one. Peace out.